How's it going, everyone? What's going on? It is John here doing a quick video. Everybody, if you are new to this channel, if you haven't seen any of my videos, I do a lot of videos on investing. So what I'm going to talk about today, here we are. It is the last day of August, August 31st, 2021. The market's closed here in California. It is 1:30, so 30 minutes after the market is closed. And I just want to give you a little proof in the pudding. I've got a 396.96% return from a very interesting and unique time frame, which is really January 2019 until here we are, August. So if you actually do the math, it's pretty wild performance. I mean, I basically I have scoured the internet, as an analyst, and I've come up with 50 to about 75 stocks right now. I think it'll be maybe closer to 75 as we kind of get to the end of 2021. Which I call turbo growth tech stocks, right? It's really on my buy list. I don't necessarily own all of the 50 to 75 just yet. But from that, I've developed a strong buy list, which is 10, I call it 10 stocks, 10 turbo growth tech stocks that could 10x in the next 1 to 10 years. All of those, of course, I do own, and I certainly there's actually going to be one. There's always a bonus in there, right? So it's always going to be 11, but I will update that quarterly, right? So on a quarterly basis, I'll update that. I don't actually have a page where you can buy that list from yet. I will have it, and we'll certainly put it in my videos when I have it. But the proof is in the pudding. I just want to show you. Now, keep in mind, I mean, I do have certainly some exposure to big tech, right? Obviously to Apple, Amazon, Facebook, and some other big tech. But I want to kind of, just show you my return, really super simple. So let's go ahead and hop in there, everybody. And I want to show you, really, it's just one of my accounts, what's called Merrill Edge, which is kind of the self-directed Merrill Lynch online account. So let's go check it out. All right, everybody, here we are. So in the account here, this is the Merrill Edge. As you can see, I'm just kind of showing you the percentage returns going back to really obviously the end of 2018 or January 1st, 2019. And this other line is the kind of, it's just the S&P, they call it S&P 500 TR, total return. So right there you can see 396.96 versus S&P 89.50, which is, if you actually do that exact math, it's pretty much 4x, right? 396.96 divided by 89.50. Yeah, like basically 4.5x of the S&P 500. So not too shabby. Just kind of wanted to show you that there. And like I said, I am kind of certainly developed a strategy, I guess, where, bottom line is certainly have enjoyed some great returns in some of the big tech, right? I've got actually 10x to my track record, 10x returns to my track record. Amazon, Microsoft, and Tesla, and then the big ones for me are actually Apple and Netflix. Apple being a 33x return, really at around now, when you actually go back and look at when I originally purchased those first Apple shares, which was June of 2007, before the first iPhone came out. But basically, I guess the spirit of telling you that is that I'm kind of try to wind the big tech down, or very, very lightly trim it, so that I can pave the way for some more. So what I've done is, with respect to the top 10, whether it's, and again, those 10 they're not always going to be the same, right? They're going to change as the quarters go on. But I will, always make it at least 10 bets. I mean, ideally be making 50 bets, right? But at least start with 10 bets, at around 5,000 each, right? So something like, you 50,000. So it's a reasonable amount of exposure. And then the hope is, maybe some of those actually do 10x in the next 1 to 10 years, and or maybe something close to that, and then you can kind of trim your losers. So everybody, that is the strategy. And again, I do have quite a bit of big tech in there, certainly from, if you go back and look at January of 2019 until present. And I do use a lot of margin. I have some other videos on my channel here where I talk about margin. Margin is just the kind of thing for where it makes sense for me. I mean, what's interesting about margin is margin can really magnify things, right? So margin can magnify your gains, and it can also magnify your losses, certainly. So you have to be really, really super careful when it comes to margin, because you're basically borrowing from the bank to either just use cash or to to buy more securities, right? So if you buy more securities and they'll go up, then your equities can go up, right? To give you a quick example, so if you have, let's say, 100,000 of securities, right, and then you go borrow another 100,000 to buy securities, so now you've got 200,000 of price investments, and then you have a 100,000 principal balance. So your equity is still 100,000, right? So if those stocks go up 100,000, now your price investments are 300,000, and then your debit balance is still 100,000. So you now have 200,000. In the case, let's say your actual price investments go down 100,000, well, you've wiped yourself out, right? So if you had 100,000 total, and then you went and bought another 100,000, so you went 200, and you have a debit balance of 100. If it went down 100,000, then you would have wiped, basically go down to zero, right? It's kind of like, for another analogy or an example, could be like buying a house. So if you go buy a house, for 200,000, and then you put $100,000 down, and then that house goes, down in value 100,000. Well, you still have the mortgage for 100,000, but you've effectively lost all of your equity. So it's a very, very similar thing in the case of buying a home. I mean, if you go get a mortgage and then the property value goes up, well, you've certainly magnified your return, because in theory, your return is really what you put down, right? So if you put down 10% or 20% or even 3 or 5%, you've magnified your return by getting a mortgage. So a margin is very similar, and there's a lot of places out there that actually have extremely low margin rates. In fact, I came out with a investing and credit blueprint recently. I put some links below if you want to go check that out. You can. I've got several guides in it. I talk a lot about a lot of the top online brokerage firms that offer very, very, very attractive margin rates. It's actually quite shocking these days. Some of these online brokerage firms, not only do they not charge commissions, but they also have margin rates that are like literally lower than mortgages these days. Everybody, if you like seeing that, the proof in the pudding, if you like seeing how you can get 400% returns like I showed you, if you like hearing about stock earnings releases, and if you like hearing about the turbo growth tech stocks, and potentially the ones that could 10x in the next 1 to 10 years, consider giving me a like to this video. Consider subscribing to the channel. If you want me to check out any sort of stock, I've got a 6-point scoring system for any stock that I look at. Go ahead and put that in the comments area. Everybody, I am not a financial advisor. I'm certainly not your financial advisor. I do have a background in investing and have done it for a while. My first job out of college was Merrill Lynch. I actually did some investment banking after that, and then worked for Sun America here in Los Angeles for 3 years. Besides that, though, I'm actually a very good individual investor, and like I said, I got 10x returns to my track record, and my best return right now is actually Netflix. When you look at their 52-week high, and is an 80x return on my Netflix, and I still have it, and keep holding. Certainly did sell some Netflix over the years, but the original share purchases are about an 80x, and if it gets up to a 300 billion market cap, it'll be my first 100x. Well, I mean, it's still my first 80x. Anyway, thank you all very much, and have a great week.